Hey traders, this is Christian from Hertz, Tribeca Trade Group, and this is a weekend video on where has my performance gone in healthcare and biotech stocks. There's a couple things that I want to go over here, but if you've been an investor in healthcare and biotech, and if you haven't been in the right places, or you have been in the right places, you have either had extraordinary performance this year in your healthcare and biotech stocks, or you've had very bad performance. I want to go through and talk about where the alpha is in this group, and I'll talk about the bad first, right? So this is going to be fun. This is XLV, right? This is your biggest healthcare ETF. Take a look at the performance. I don't think it takes a rocket science to figure out that there really hasn't been a lot going on here. It's been pretty flat performance. You could see on the bottom of the screen, which the Bloomberg terminal allows you to do, is put in fund flows. And you could see it's been pretty sketchy. It's been pretty trendless, right? A couple days of inflows, a couple days of outflows, not much going on there. Same thing with one of the larger biotech ETFs, which is IBB, which you may be familiar with. You could see the same thing as XLV, trendless, right? Or maybe sideways is probably the best way to categorize this. Same thing with your fund flows, probably a little bit more outflows than inflows this year, you could see on the bottom of your screen. And then maybe the third one that you might be familiar with is XBI. By the way, before I go on to XBI, IBB, XLV, one of the distinguishing characteristics is that it's market cap weighted, meaning your largest companies are the largest weights in those ETFs. XBI may be a little bit better, maybe a little bit more better uptrending. It's been sloping up, maybe a little bit better fund flows as well, but still pretty, sporadic in terms of, some couple days of inflows, couple days of outflows, not really consistent in terms of accumulation. All right, so let's dig into the numbers. And I've got some other names in here that you may not be familiar with. I'm going to get to them, and that's really where it gets fun and interesting. But XLV. So what I like to do is take a look at fund flows, right, to see what's going on. It tells me if there's some appetite, if people are getting involved, if big funds are accumulating these funds or not. So what do we see here for XLV? We'll stop again. We're starting with the bad. I always like to go from bad to good. $1.4 billion of outflows, and notice I have these sorted by your largest assets under management in terms of ETFs. So XLV is the biggest one out there. IBB is your second biggest, and it's seen $1.4 billion of outflows. What does that look like in terms of overall fund size, and how much money has been taken out, because this is important. 8.4% of the fund has been unwound. Similarly, in IBB, 11.2% of the fund has been unwound. So really, there's been some money taken out. XBI, you could see, has had 16%, $729 million of inflows this year. So there has been some money that's been added there, and that's about 16% of the ETF has grown year to date. So here's where it gets exciting. IHI, medical devices, right? So this has actually attracted $474 million, a little bit less than XBI, but some of these funds, the assets under management are pretty small, so only $2.1 billion. That $474 million represents a growth of 28.1% in the fund. So some pretty good growth there, and you could see the performance. Now we're starting to get to some pretty interesting areas. By the way, your XBI has gone up 10% year to date, much better performance than XLV or IBB. But the medical device group has actually grown more, and that's up 13.9%. I also have FBT in here. That's another biotech ETF. That has also grown at 13.4%. But take a look at the big growth here. And again, these are pretty small size funds, just $567 million under assets. And this is called the PSCH, Small Cap Healthcare. It's also, they call it Small Cap Healthcare, but there are biotech stocks in there too as well. That's grown 59%, almost 60% in size. Take a look at the performance, 27% up year to date. Talk about alpha. And again, really a case, I think, of growth versus value in this market right now. You go back to XLV, which is market cap weighted, where again, a lot of where the larger cap names are the bigger weights, only up a fraction of a percent versus 27% if you were in the small cap portfolio year to date. And again, it's grown in size this year. And same thing with another ETF that you may not be that familiar with, XHE. We actually did a webinar on this ETF. We did this a couple weeks ago where we really dug into the to the individual names that are causing the growth. And some of these charts are pretty amazing. So I'm going to go into a couple of these, but XHE has attracted 100 million in assets this year, which represents very similar to PSCH. 45% it's grown in size, so pretty good. And again, good performance there, up 18%. So let's take a look at this while we have the XBI. We'll take a look at how this looks graphically in terms of when and where the inflows have occurred. So it's been a little bit different. So again, if you look at, we'll start with XLV just so you have a comparison of the fund flows, which have just been all over the place, right? Back and forth, no trend. And then if you look at IHI, the medical devices ETF, and you can see it's a different picture, right? There's been some accumulation, a little bit spotty. It hasn't been steady accumulation, but you could see that there definitely has been some good inflows and recent inflows at that. XHE. And take a look at the performance of this one. It's really escalated here after those inflows that have happened. Notice where those inflows occurred, by the way, right before earnings season, right before a bunch of the top weights in this ETF have had inflows. And then if you go into some of these names, so let's bring up XHE. So again, I'm not going to go over all the charts. Like I'm not going to go over the chart of Pfizer and Merck. But if you do that on your own time in J&J, you could see that a lot of these stocks are either in downtrends or they're just been going sideways. But if you look at some of these charts, right? If you look at INGN, and we'll just move this to the side of the screen so we can keep an eye on the tickers here. And let's see, I'll do that with, we'll do that over here. So INGN, just to illustrate a couple of the names and their performance. And again, we did a whole video on some of these names to basically describe what they do, what type of business they do, and the liquidity in some of these names. But really strong performance. DXCM is another one. These are all basically just hitting the ball out of the park. PEN, which is not Pennsylvania. It is Penubra. I mean, look at this thing go. So some of these are a little bit overbought, you could see. Some of these are probably a lot overbought. Maybe ABMD might be a name that you're familiar with. Sorry, I think I have that symbol wrong. Yeah, ABMD, that's right. I think I just typed it in wrong. Said it right, but didn't put it in there right. But again, really strong performance that are going on in these individual names. The same thing that could be said for if you go to the small cap healthcare ETF, that's PSCH again, by the way. And if you look at some of the holdings that are going on here, again, some names you may be familiar with, some not, but you could see that the performance has just been insane if you go one by one through some of these charts. So if you're not a biotech expert, right? If you're not a fund manager in biotech, I think really playing the ETFs is a great way to get access to this group. Because I will tell you, I'm not an expert on all these companies. So I think, by using the ETF to get into these groups, will get you the alpha that you're looking for, will get you a slice of the market that you're looking for without taking huge risk. So again, the standard deviation in some of these individual names and in the ETF itself is going to be higher than XLV and IBB. But I think so far, if you've been in some of these names, you've been rewarded pretty nicely. The other thing I want to talk about is liquidity. Same thing with XHE and same thing with IHI, which has performed pretty nicely. The last thing I want to talk about is liquidity, right? I often get this this comment is that, oh, well, some of these names, they don't trade much. So, why do I want to get into an area that, I'm worried about liquidity? So what I would tell you is this, always when you're looking at ETFs, you want to know if the underlying basket that the ETF tracks is liquid. Why? Because that's how the market makers source liquidity. So here's a good example. IHI, if you scroll over here to the right of the screen, you can see that the average volume in this ETF is barely 100,000 shares. It's 110,000 shares, the average 30-day volume in IHI. So that's not a lot. However, take a look at this, right? On Monday, they traded 1 million shares. How did they do that without affecting the price? Well, the market maker will source the liquidity in the underlying shares. This way, they're not distorting the overall price of the ETF. It's just how market making works in the ETF space. And there's something called implied liquidity that will help you determine whether or not the underlying basket is liquid. So remember what I said, the average volume in IHI is only about 100,000 shares, and what's called the implied liquidity, it's a gauge of how liquid the underlying basket is of the ETF. On average, trades about 1.4 million shares, and that's like the affecting about 20% of the average volume of the of the names in the basket. So let's not get into that, but you can see that there is more liquidity into the underlying basket than the ETF. What does that mean when you're placing an order and investing? When you have a pretty wide bid-ask spread like this, you can see 42 cents at 71, which was the close, so that may be a little bit distorted. What you want to do is use limit orders, not market orders. By using a limit order, sometimes maybe in the middle of the bid-ask spread, maybe a little bit more towards the ask, you'll find that a lot of times you will get filled there, and this way you're not paying the ask or above. It's a little bit of a trick to trading in ETFs, since again it works much different. The market makers work much different trading an ETF versus in just an underlying individual name. They're sourcing the liquidity in that underlying basket. So using limit orders can help you source that liquidity. All right, so that's today's video. I hope you learned a little bit. Really, again, if and this is what I try to uncover every day, is what is moving. I would rather personally not be in XLV or IBB. I think, and we could come up with a number of reasons why some of the large cap names are not moving right now. Drug pricing may be something going on here, but what we're trying to uncover is really what is moving very well, what's performing very well, and where the alpha is in this market. So I hope you enjoyed the video and have a great day.